So Prashant, we know that these home builders have been doing these mortgage rate buy downs where if the 30-year fixed rate mortgage is at 6.5%, they'll bring it down to something lower, maybe in the 5% range. But your reporting shows that a lot of these home builders are managing to bring down the mortgage rate to something in the neighborhood of 3% or 2% or even 1%, things we haven't seen since the COVID era.
Yeah, I think of it like, sort of like being at a car dealership or something, the kind of rates they're offering. So I think what it is that buyers are really concerned right now about the economy, about their jobs. So you got to really get their attention, and 5% isn't going to move the needle. They have to get even more aggressive. So you're seeing even fixed rates below 4% for 30 years, and in one case it's 3.99%. But before you get to the 3.99%, which is fixed, you get 0.99% for the first year, 1.99% for the second year, and 2.99% for the third year. So it's pretty great stuff.
Yeah, so that teaser rate, it does go up, but it's still much lower than the average fixed rate. So part of this is the economics of renting versus buying has changed a little bit here, because for the first time in your reporting, you say that the price for a typical new home is cheaper than one for an existing home, whereas typically there has been a premium of about 16%. How does this change things up for these home builders who now have a lot of unsold inventory?
Yeah, I mean, like the new home salespeople need something, right, to get people into through the door, right? So this is what they have. They have these carrots. But the existing homes, it's really kind of this. The big surprise here is that mortgage rates fell to close to 6%, and builders were hoping that meant they'd get even more traffic, but it's kind of worked the opposite way, because existing homes have gotten more attractive as a result, and there's a lot more listings for existing homes. So it's much harder to sell a new home now.